Welcome to etvFutures.com. It's Thursday, December 13th. I'm Remy Hokie for Commodities Recap. NYMEX crude oil futures fell over $2 on the day after rallying nearly 5% in the previous session. There was plenty of profit taking on the day. January crude ended down by $2.14 at $92.25 a barrel. In other NYMEX petroleum products, January heating oil fell 2.85 cents to $2.6147 a gallon. January gas was down 3.84 cents at $2.3744 a gallon. Meanwhile, natural gas futures also declined, even though the EIA reported inventories were down for the third straight week. January nat gas paired earlier gains, ending down 22.9 cents at $7.179 per million BTU. Over in the metals complex, gold futures traded lower below $800 an ounce, but ended the session at $804 an ounce. The precious metal came under pressure as the U.S. dollar gained against most major currencies. This afternoon, we're joined by Tom Puckett, commodity broker at KIS Futures. He'll recap today's session in energy and metals and also give us his short-term forecast.
Thank you, Remy. We've had a very active trade in the last week in the metals and the energies, as well as basically across the whole board on the commodity front. We've had action in the equities, action in the currencies. The grains have taken a run of their own, and the livestock has been pressured in current trade. So, been a very busy board for the week. In the EIA report yesterday, the Energy Information Administration's report of inventories in the energy sector yesterday, came up with a crude oil decline of inventories of about 700,000 barrels, as well as a decline in distillates, that's the heating oil and diesel, of about 800,000 barrels. So little pressure there on the inventories, bolstering possibly a little higher pricing. Although today we've seen the crude actually come off a couple dollars, currently pressing down from previous highs. We opened a little below yesterday's close. We ran up, and we've run down to where we're now about in the trade about $2 or so below the close yesterday. So pretty volatile. Gasoline inventories were actually up 1.6 million barrels, where the forecasts were looking for about 1.2. So that has probably translated into some volatility in the market trade as well. The dollar has been under a little bit of pressure with the interest rate being lowered a quarter by the Fed yesterday. At the same time, the euro has been both higher and lower. So kind of a whipsaw. The current dollar in trade is up about 43 points and 430 basis points, and the euro is down about 100, whereas earlier on it was just about the opposite. So the trade still is very much antithetical or reverse trade, inverse one to the other, low dollar, high euro. The current trade in the crude oil, we have a front month January in the futures around 92 and a quarter, about $2.12 down. Very definitely, we've been moving through the higher range from about 870, 875 up to the highs of 99.29. So we haven't gone back up there, but in the mid-range of that, we have some interesting support lines as well as resistance. Crude oil may be getting ready for some kind of a breakout with the higher prices we've had. And the fact that it's just not good public relations for everybody to blame oil companies for high prices in crude, because they really don't set prices in crude. It, to me, looks like it might be a possible look of a decline coming in the price of crude. The natural gas has taken a little advantage of the current cool snap that we've had, a little ice and snow going on, and we've rallied a little bit from lows under $7. Yet we still find that the crude, or the natural gas, is down for the day at the January contract, down about 21.5 cents, over $7, about $7.20 in that range, with the range today shown of 752.9 down to 717.6. So energy sector very active, very quick trade. In similar manner, and kind of in course with the energies as we look at today, the gold has moved south. We're at about $15 lower than we were. We opened gold again pretty strongly on the January contract. We actually ran up today, or the February contract, I should say. The February contract, we ran up to $8.19, and currently we're trading at $802.60. with a low today of about 797. So looks like a little profit taking going on. I still think the market is favorable to the a haven value of gold and silver, a safe place to be, and I think that still remains. We look like we're having a little profit taking. Silver likewise has traced south. We're about 57 cents on the December contract, which is front month still, and about 58.5 cents on the March. So pressure on the metals, but they still are at high levels. $14 range for silver, $800 range and above in the gold contract. Prospects for the future, it's going to relate to basically what the markets do. The Dow Jones is down slightly. The S&P is down a little bit. Not major moves, but they are a little bit pressed. Dollar stronger and the euro is weaker. These things could reverse. So volatility seems to be the name of the game, with, I think, a bias for some retracements. And I think that's what we're going to see in some of these markets, possibly more in the energy than in the metals, but I do think we're going to see some slides both sides of that table on that trade. So as we finish out the week tomorrow, it'll be an interesting chart pattern to look at. It'll be all over the place, basically. And we'll just take a look next week to see what they've done. Thank you very much, Remy.
That was Tom Puckett, commodity broker at KIS Futures, with his commodities commentary. I'm Remy Hokie. Join us later for PM Exchange right here on etvFutures.com.